Welcome to the Kaiser Reef shareholder and investor webinar. Kaiser's ASX ticker is KAU. We're joined today by Managing Director Jonathan Holmes and Director of Operations Brad Valukas. Kaiser Reef is a high-grade gold producer and exploration company within the Victorian goldfields. Kaiser owns and operates the A1 gold mine, the Molden Gold Processing Plant, and the Molden Gold Mine in Victoria. Today, Jonathan and Brad will discuss the transformational acquisition of the Henty Gold Mine to add to this portfolio. And transformational it is. The number of registrations to attend this call was overwhelming, and it speaks volumes to the excitement and the interest surrounding Kaiser at the moment. A reminder, questions can be asked via the Q&A button at the bottom of your screen in the Zoom. We do have a lot of people here. There will be a lot of questions, so we'll get through a few, but we'll look for other avenues to answer those questions if we don't get to yours. I'm now going to hand over to Jonathan, and he'll go through the presentation. Jonathan?
Thank you very much, Mel, and thank you everyone for dialing in. This is, as Mel said, it's transformational. It's a real evolution for Kaiser. We're incredibly excited that we've taken the company now into a whole new, far more, I guess, investable, market-aware sort of position. We're going to have over $100 million in revenues from this acquisition, and the collected company will now be producing over 30,000 ounces of gold. Inheriting Henty now at a really great point in time. It's generating a very strong free cash flow, and obviously that's partly aided by the exceptional gold price, but it is a very solid production centre for Kaiser and very complementary with our existing Eastern States assets. The acquisition price is fantastic. It's got a 1-year payback, and that's compelling on basically any way you look at it. So very exciting. We're also very pleased to be entering a strategic partnership with Catalyst. They'll become a 20% shareholder. They'll be appointing a board director, and we'll be working together on really unlocking the Victorian goldfields with the Molden Gold Processing Plant as a centrepiece. Really compelling metrics following the capital raise and this transaction, with an enterprise value of just $65 million. And for the first time in a long time, really, Kaiser will be totally cash unconstrained too, with $27 million in pro forma cash to really drive the opportunities and accelerate all the exploration that we have. And in addition to that, there'll be some changes made within Kaiser. Brad Valukas will be coming on as the Chief Operating Officer and an Executive Director to really roll his sleeves up and manage the operations of the Kaiser assets and Henty. And it's probably a great time to hand over to you, Brad.
Thanks, Jono. So key takeaway from this slide would be, I think we have a very, very well-balanced board. Jonathan, very, very strong on the geology side and geophysics, and a lot of M&A and corporate experience. Myself as a mining engineer, as Jonathan has touched on, as well as Catalyst representative coming on board. So we're not losing any IP or knowledge about this asset at Henty, and look forward to leveraging that in the future. We're certainly setting up to build Kaiser now as a multi-asset high-grade gold producer on the east coast of Australia. Starting position will be 150,000 ounces of reserve, 600,000 ounces of resource. That includes our Molden project, which we'll talk about a little bit further on. As Jonathan said, a very modest PV to enter in terms of the production profile and the revenue that we're capable of spitting out, which is $65 million, and we will be well cashed up. Talk about Henty acquisition in a little bit more. We are acquiring what we think here is a absolutely fantastic asset. Mine life based on reserves is at 5 years. There's a very good resource base there as well, and plenty of operational improvement opportunity as well as exploration opportunity, and we'll talk about that going forward. $100 million of infrastructure. One of the things we did very well at Northern Star was to leverage great projects that had great infrastructure, maybe needed a little bit more love, and grow them and extend them for years to come. I think we can do that very well at Henty. Acquisition terms, very, very attractive. Upfront acquisition of $31.6 million. It includes $15 million of cash and $16.6 million of shares to Catalyst, of course, then coming on as a nearly 20% shareholder. As Jonathan said, close to or less than hopefully 12 months of payback based on current cash flows for the entire upfront acquisition cost. Should be less than 6 months for the actual cash out component. There is deferred consideration we need to pay Catalyst 50 ounces per month over 5 years, not commencing for the first 6 months, to a total of 3,000. So definitely capped there. That's potentially 50 ounces per month out of production, around about 2,000, and obviously we would expect to grow that. There is a great exploration opportunity at Henty. Again, we'll talk about that a little bit more in the slides. There's 0.5% royalty on that area. And of course, Catalyst are acquiring something that they think, they believe, and rightly so, is of immense value in the Victorian goldfields. The option to JV 50-50 with us at the Molten Processing Plant. A lot of upside for both parties involved in that. Ultimately, economies of scale. We don't lose anything. Nothing will happen for the first 5 years. In any case, as Catalyst progress through permitting and getting their Bendigo project up and going. But yeah, lots of upside. That's the way we see that JV. Henty itself is in the strongest position it's been in for at least a decade. Certainly has been reinvigorated under Catalyst. As I said, in terms of picking up that infrastructure, started by Placid Dome, picked up by Barrick. This is a fantastic project. It definitely had a lean spot running through Unity, and with Unity then followed by Diversified and Piper. Catalyst have done a fantastic job stabilising that ship. Talk just in the next slide a little bit about what they've achieved, and well positioned right now to take its fourth life with Kaiser. Henty, we think is certainly set up for success. We believe there's a lot we can still add to Henty, and we can take it a lot further. Catalysts are also of that view. That's part of the rationale for their divestment, is to support us in taking it forward. But full credit to Catalyst in terms of what they've achieved. Despite the fact they've been mining and depleting that resource, they've increased it from 330,000 ounces up to 450. They've added that first reserve there of 154,000 ounces. Through that time, they've managed to keep their all-in sustaining cost between $2,500 and $3,000 Aussie an ounce. Last financial year made $16 million. If we put the current gold price in, we're well over $50 million in terms of potential profitability. And all of that includes what Catalyst have done in terms of capital expenditure into the project. Henty production optimisation, as said, we think there is certainly room to add, in particular development rates and de-bottlenecking that decline. Very much the Northern Star playbook here that's been implemented many times and been involved in implementing, which is optimise the operations. After that, cut the costs out. After that, build a resource and reserve, and then ramp up production in total. So we think there's some pretty, not necessarily low-hanging fruit, but very achievable objectives here at Henty on the underground. Along with that, we need to improve and upgrade, expand is the right word I'm looking for here in terms of the processing side. I think there's some easy wins in terms of SAG mill and throughput. Certainly targeting at least 10 to 15 just on the SAG itself, and some other minor changes, really looking to get that throughput up to above 350,000 tonnes per annum in the short term. Ultimately, we want to target around 450,000 tonnes per annum, and we see that as matching the underground going forwards. Maintain the same all-in sustaining cost. Henty is a very, very fixed cost site. We can do a lot of extra ounces for not that much extra money as we go through on a production basis there. We want to solidify Henty as well above 30,000 ounces per annum on a production base, and ultimately feed all that extra capacity for development and throughput into extra drill platforms underground, being able to reinvest strongly back into the project in terms of drilling, grow those reserves and resources, and ultimately increase our production levels. Henty, As I said before, that we think it's nowhere near finished, and there's a lot of upside there from exploration. Zone 96 and Cradle Zone within the mine footprint. We've got a 5-year life just based on reserves. We've got 450,000 ounces of resource. We believe strongly we can still add to that through these areas, continue to increase resource and reserve despite depletion. But then to the left of the page and to the south is the Darwin target zone, that potential extension there. Darwin itself has produced 655,000 ounces there. There's a real opportunity. I think the next slide shows it better to be able to extend Henty as a whole. The system is nowhere near finished, and let me show you that. Okay, so this running off to the southwest here on the page, you see that Darwin target zone. This ore body at Henty has been faulted many times, potentially a slightly bigger fault that we are up against now. There's been some great drilling into that zone already. It shows strong mineralised, strong alteration signature, very similar to what's seen around the Henty ore body in Taylor. It's part of a corridor that runs for another 5 kilometres off to the southwest. Strong gold, silver and copper signature there, and Henty does have a strong copper signature. So we know the corridor is well and truly alive. We have strong alteration drilling into that Darwin target zone. There's drilling set there with 107 metres of alteration. Hasn't nailed the ore body yet in terms of gold, but we think a massive amount of upside here. While this is all upside here, we think the metrics are compelling for Henty without any of this Darwin upside. But if this comes on, this is an absolute game changer for us as a company. Just to touch on our existing assets a little bit and trying to move through these rapidly so we get the time for questions. Our project in Victoria, our biggest project here is Maldon. It's 1.7 million ounces mined historically at a cracking grade of 28 grams per tonne. It's 500,000 ounces mined off the top here alluvially as well. It's fully permitted. It sits on granted mining lease. It's ready for recommencement. It's 4 kilometres by road to our operating plant, our process plant here at Maldon. It's got a decline into it already, 2.4 kilometres long, full size 5x5. We've got power, it's dewatered, and really it's ready for drilling and a restart. Placed on care and maintenance just in 2018. Gold price significantly less than what it was now. Everybody that's been here for the past decade has certainly been undercapitalised. Kaiser as well, it falls into that position. It's one of the things that Henty does for us. Massively changes who we are as a company and what we have capacity to do. So as a pipeline project, Maldon is fantastic. We've got a design drill program to try and lift this resource up to 500,000 ounces between measured and indicated and inferred. Existing resource there of 187,000 ounces, and that JORC compliant exploration target 165 to 345. So we see ourselves bringing that fully into reserve, into resource, sorry, and then reserve post that and pushing the project forward. Our processing plant here at Maldon, just 4 k's from the mine that we just talked about, currently processes our ore from A1. We ship that down here every day. Key piece of infrastructure in the Victorian goldfields. We leverage this into future consolidation plays. Catalysts certainly see the upside here of being involved with this asset, and hence the potential for the JV here in Victoria. So a lot of upside here at Maldon, both the mine and the process plant. And of course, we'll just touch on our A1 project at the end. It's Australia's longest running gold mine for the last 40 years. It's been stuck mining remnant material. $25 million has been invested to get this decline down to the bottom of the mine. We've made quite a few changes here on site over the last few months. We've finally got the decline down below the old historic 23 level. It's now well into the Nova zone. We're actually cutting the sill pillar below the oldest of the lowest of the old workings, starting to ramp up ore development. We've got drilling ongoing, getting some great high-grade results there, and we look forward to progressing this in the future. Looking at a short-term ramp up, we're targeting that 1,000 ounce per month profile out of ore development, and then targeting re-ramping it back up to 20,000 ounces per annum once stoping picks up again, once we finish some of that ore development. We're just into transaction metrics there. Last thing I'll touch on is just our uses and source of funds. $30 million raise. We've got $10 million debt facility in place from Oramed, which really secures our working capital position. $15 million cash out up front. Cost of transaction stamp duty 4. Surplus working capital 23. Over the year, we've got environmental bond and a few other things that will come out of that, but we're also going to be in we think, a strongly surplus position on cash flow basis, and really sets Kaiser up as now a great platform moving forward. Mel, I think open to questions.
Yeah, fantastic. Thanks, Brad. Thanks, Jono. I've got lots of questions coming through. A couple of people have asked, the Henty mine makes up 30% of catalyst production. The question is, why are they selling for 30 mil?
Okay, thank you, Mel. Firstly, you can take a view that they're not really totally selling. They're still retaining a 20% shareholding in Kaiser now, and they'll be appointing a board nominee. And there are tag-along payments to go along with that. But as a value add, we are unlocking the Victorian goldfields on that strategic partnership. So I think there's real value there as well.
I think maybe I'll just add,
Go for it.
A fantastic job in terms of stabilising that project. The mill is full for the first time in 10 to 15 years, right up at that 300,000 tonne per annum run rate. They certainly recognise, though, that there is more opportunity at Henty. Like, we're not just coming into this and thinking we can do these things like catalysts. There's certainly, and slightly different, obviously, just slightly different things that we would do, but they certainly see there's a lot more upside left here at Henty as well. They are very, very heavily focused on their plutonic operation. Henty is getting it's the second child there at the moment. They recognise that going into an entity with it as the flagship project will make sure we get the most out of Henty, and they are certainly looking forward to participating on that upside basis.
What's the late? We touched on, or you touched on it, Brad, with the slide on A1, but there are a few more questions about the A1 mine and the Nova Zone and production there. And can you give a bit more detail on what's happening at A1? Brad, I'll throw that one to you.
Yeah, so the first thing I'd say is we look at Henty, that's coming into the company as an additional asset. So there's definitely no swap here from A1 to Henty. Our aspirations for A1 remain completely unchanged. So A1 is a fantastic little deposit. It's produced historically between that 800 and 1,000 ounce per vertical metre. In terms of our 20,000 ounce per annum target, it's just over 20 vertical metres per year to fully extract. So at the end of last year, we had to make some tough decisions. We shuffled out the mining crews. We made some changes to our personnel makeup. There were some management changes on site. We needed to get that capital moving. We did raise money towards the end of the last year to put into that. Happy to say that we've done that. We're pushing lower and really opening that up. We've now got ore development operating. We're back to some small scale development on to our 1200 level. The 1190, we're back into there chasing. We've got a drive that's just taken off, heading towards the high grade Bass Reef that's right at the southern end there. We've got development on the Tasma and the Dukes going on the 1175. The 1165 is kicking on the Tasma as well. So the tonnage that's coming out at the moment is increasing rapidly. We've got our central decline position that we've moved into the dike. As we push to the edge of that, we'll start to see the grades come up with the ore development as well. So we're working hard to get that ore development pushed up. Our general productivity metrics have come up massively. I mean, close to 100% in the last 3 months in terms of what we've been achieving in the capital. So we're still very much focused on achieving what we said we would do at A1, and still see very bright future there.
That's Brad. Jono, are the major shareholders in Kaiser participating in this capital raise?
Yes, Mel, very pleased to say that the majority of our major shareholders are very supportive of what we're trying to do here and have participated in a big way. So that's a great sign of support.
And Jono, assuming that tranche 2 closes early May, when does the ownership transfer? When will you take over the books at Henty?
It should be about within 10 days of that second tranche closing. We should be have transitioned.
Another question on the transaction. How did this come about?
Well, we have been collectively looking at the Henty project for some time, and we've been head down really getting A1, focusing on A1, and we feel like we've just turned the corner on that. And given the fantastic transition work that Catalyst have done at Henty and the very strong gold price, I guess just the metrics and attractiveness increased, that we're delighted to have been able to engage with Catalyst and close this transaction.
Brad, the Union Hill Gold project, are plans remaining the same?
I think so, Mel. The big difference is that once we've got our feet under the desk at Henty and we're solidly producing cash out of that, we're just in a fantastic position to be able to pursue some of our pipeline projects, and clearly Malden is and Union Hill is a big pipeline project. So yes, I think plans remain the same. We'll generate that decent sized resource. We'll look at putting that into production at a decent scale. That's our aim and ambition, obviously, forward-looking statement there, but the difference is we'll be in a fantastic position to actually execute on that. So I think for anyone who has previously looked at us and thought, we've got potential at A1 and Malden/Union Hill, our ability to execute on that now, especially Union Hill, is massively increased.
Another one, Jono, if this is a bit of a long one. So if the Kaiser mill is operating 50/50 in conjunction with Catalyst, would Kaiser have been capable of filling it on its own, the 50% input? And is it detrimental to Kaiser if resources are withheld, with the other half being allocated to Catalyst?
You broke up a little bit there, Mel. Sorry, in the middle of that.
No worries. So the joint venture with the plant, is that 50/50? And is it going to be detrimental to Kaiser? Like, would Kaiser still be able to fulfill that 50% on its own? And is it detrimental in the future if 50% is to Catalyst? Does that make sense?
Yes, no, that makes perfect sense. So the first point is that it's not going to happen. Nothing happens in this option agreement for the first 5 years. So we've got a long runway before it's a point to contemplate. One of the heaviest points of negotiation was around the expansion of the mill. That's really one of the key points. Small mill has got quite high unit operating costs, so we want to make the mill bigger, and Catalyst certainly do as well. So at the time that we enter a JV, it's a very attractive structure. Catalyst will finance the expansion of the mill, and we'll have a financing through Catalyst to tag along. When that financing facility is paid off, Kaiser will have 50% of the expanded mill.
Yeah, right. John's having a drink there. I'll jump in. Yeah, so I mean, the big part of this is, as John said, nothing for 5 years. Both parties, us and Catalyst, actually see us progressing our own projects and ultimately expanding that mill. We have given Catalyst some rights to be able to do that. Beyond that 5-year period, we would benefit from that in the long run as well. Economies of scale here is ultimately, I think, what this is all about. So certainly, we might look at some compromises in terms of how it goes forward, but ultimately we should both be benefiting from bigger mill, cheaper operating costs, which all feeds in ultimately to what we call resources and reserves, and ability to get projects up and going and make money.
Okay, well, we wanted to sort of keep this to the 30 minutes, so we'll wrap up in a moment. I think the last question I might direct to either one of you, but basically, what should shareholders, there's so much going on with Kaiser, but what should shareholders be most excited about right now?
I'll let you run with that in case I swallowed some water.
Now, certainly, I'm personally very, very excited with the Henty Mine acquisition. I think as we started off with, right, that is just transformational for a company. So Kaiser has been in the position where it's been spending a lot of money to get down at A1, hasn't been able to execute what it would like to be able to do at Malvern, and it's been on that smaller scale of production. This really changes who we are as a company. I think the pro forma EV coming in at 65 million is incredibly cheap, but plus the market cap, like it sees us heading closer to the 100 for a sizable producer on the ASX. Our ability to get Henty bedded in, execute on everything we would like to be able to do, and then just continue to grow the company, I think is fantastic. So I'm most excited about just growing the company and building something solid and substantial.
From an exploration perspective, a news flow perspective, we have drill rigs at Kaiser right now at A1. We'll have drill rigs at Henty. The Malvern project will be subject to a big drill out at some point and has a huge opportunity. So as Brad was saying, the pipeline is fantastic to get up to much bigger production rates going forward. So collectively, the assets we have just have so much upside and will provide lots of news flow. So I think it really is quite an exciting proposition all around.
Well, thank you both for joining myself and everybody on the call today. Congratulations. I know there's been a lot of hard work, so well done. And I'm sure the hard work is just ahead of us all. So congratulations again, and we'll chat soon.
Thank you, Mel.
Thank you very much.
Thanks.